Good morning, guys. It is Wednesday, March 6th, 2024. This is Bathrobe Business. I got the coffee and I got the news, and I don't have too many stories. So it's actually kind of a quiet day. There's not too much going on in the market. I've got three major stories to report on. I'm probably going to report with the headline first because I don't think it needs much discussion or elaboration. So Jerome Powell is currently testifying before Congress. The notes of the meeting, I think, are already out, even though I thought the testimony was running longer. But essentially, the long story short is Jerome Powell is saying he is not ready to start cutting rates, which is good. I keep saying this is good. Do not believe the hype. Low interest rates do not help the common man. They help the large corporations. Again, I'm not a communist. I own three businesses. I'm trying to acquire a fourth. This is simply just logic. Cheap money makes it easier for big guys to lend money, and it destroys the American middle class. It is not a coincidence that every time interest rates are low, the American middle class shrinks and things become unaffordable. The higher their interest rates are, the more your savings are rewarded, and the more purchasing power you start to gain because large corporations can't lend money at zero interest and essentially have a printing press to do whatever they want. You don't have that right, but big corporations do. Again, not a communist. That flag is a novelty. I get questions on it every day now. That's my face on the flag. That's the joke. I was also born in the former Soviet Union. So essentially that's what's going on is Jerome Powell is saying we're not ready to cut interest rates even though we're headed in the right direction. Inflation is still higher than it needs to be. We are not ready to make that judgment. So just a couple of days ago, people were saying a cut in June is likely. Again, Jerome Powell has shut that down, saying it is not likely. We are not ready to make that assessment yet. There's still a ways to go before we can cut interest rates. By the way, for those that say it was an election year, I finally just did a Google. It's a pretty simple Google. In the last 40 elections, interest rates that were cut during the election year were only about a quarter of the time. So when people say it's likely that interest rates are going to get cut because it's an election year, that's actually not true. That only happens about 25% of the time. 3 out of 4 times, they do not get cut. In fact, sometimes they go up. If you just Google it, you'll see it for yourself. So I actually do like that. I hope that maintains. I know there's political pressure being put on Jerome Powell. That's not a question. It doesn't matter who is in power, whether they're a Democrat or Republican, are going to put pressure on Jerome Powell to cut interest rates. But I am glad that he is staying strong. The other big story is now. Before I forget, gold. Now here's the scary part. For days I've been reporting about the price of gold. Gold is almost unchanged. So that's actually scarier. The fact that gold did not go down because of the testimony of Jerome Powell makes me even more worried. Makes me think that inflation is actually even more systemic and more ingrained than we think. Because gold is, remember, a reserve. It not always does it move with market inflation rates. In fact, oftentimes when we had those 9% inflation rates just a couple of years ago, gold was not moving at all. But the fact that it is still a reserve, and it is at 21.45 right now, well above where it should be, $100 higher than it was this time last year. Last week, $100 more than it was last week. It makes me pause and be a little bit concerned. Pardon me. So that's something to watch. I will have better numbers on gold for you tomorrow as far as I'll research it a little bit more. But just looking at the spot price, yeah, it's still high, and the market's in the green. Next story is about ADP. Non-farm payrolls came out from ADP, but this is not this is not the Labor Department's numbers. This is just ADP's. The Labor Department is going to issue numbers on labor at the end of the week on Friday, but ADP is reporting 140,000 jobs below the estimate of 150,000, so about 10,000 short. However, I am hesitant to say this is a concrete number because last month, same thing happened. They said payrolls were down, but when the Labor Department issued, it was actually much higher. They blew past ADP's numbers. So remember, ADP is a payroll company. While they do have data on a lot of payrolls, they are not the only payroll company in town. So I think as the years go by and companies like Salesforce etch away at their numbers, they're less and less reliable. So we'll have better numbers on Friday where we really know what's going on in the Labor Department. And last story is really quick, just mortgages. So spring season has begun. Mortgage demand has surged 11%. However, interest rates have fallen just a hair. Still above 7, but they're at 7.02% from 7.04% last week. And actually, that's down from the last time I reported. I missed last week's numbers. So last time I reported interest rates, they're at 7.08%. So we're just about at 7%, and mortgage demand is increasing by a healthy number. This is pretty average for the market. Let's remember that homes, like everything else, have a season. Most people don't like moving or selling in the winter, so spring has begun in a lot of parts of the country, and that's exactly what's happening. Homes are starting to move. As long as we can maintain flat prices, I think that's the important part. That's it. Like I said, I don't have much to report for you guys today. I will be back tomorrow, hopefully with more news and more interesting subjects. I hope you have a productive day. I'll see you in the morning.